Hello, folks. Welcome to Pro Trader Strategies market commentary for Thursday, July the 22nd. Actually, this is Spotting the Trade. We're an educational company here at Pro Trader Strategies. What we're trying to do is educate you guys on the markets by talking about the economic data, see how that's impacting the overall markets, and then find the optimal option strategy for any given assumption we come up with. What I mean by that is when we got a bullish assumption, we aren't just here at Pro Trader Strategy looking to the long call in order to advantage from that, because it's not always the best strategy for a bullish assumption. And I talk about those ideas in these daily market or in these webinars that I'm doing today after the close. Thursdays after the close, that's when we hit that stuff up. So if you want to check that out, make sure you subscribe right down there below. Make sure you subscribe and hit that notifications button. Why the notifications button if I'm coming on at scheduled times? Because I don't always do that. I will pop on now and again and talk about different strategies or different option strategies that I find at any given time. So I want to make sure you guys are on top of all of that. So I want to make sure you guys get that notification when we are going live. Finally, comment over there at the side, because you guys are driving this content, folks. Talk to me over there. Make sure that you are stirring this towards what you want to hear or talk about. If you guys want to look at a specific stock, I'll do that. Throw it over there in the comment section. And if you're doing it after the live session, I'll circle back around, folks. Make sure you're all clear concept. And smash that like button for me. It really does help out. All right, let's get on with the economic data. Across the pond, really not a whole lot. We talked about that. They did have their monetary meetings, and they didn't change anything. So really, like I said, nothing to see across the pond. But here in the United States, we had some stuff coming out in the form of employment claims. Now, keep in mind, we have been seeing a lot of people claim unemployment. Why? Well, because it seems to be more beneficial to be on unemployment than finding a real job. They're paying you more in some regards. Well, unemployment claims, 419,000. That's higher than the 350,000 that we got or were expecting, and higher than last month's reading, 360. Well, they bumped that back up to 368. So revision and headline numbers, really a disappointment. Overall equity markets were shuddering a little bit at that. We'll take a look at those markets here in a moment. And then we got the CB leading economic indicator. This is the LEI leading economic indicator, something to keep an eye on. 0.7, lower than the expected 0.8. Well, some people said it might not only miss by 0.1%, but keep in mind, it's down about 50% from last month's. That reading came in at 1.3 last month. It revised that down just slightly to around 1.2. In existing home sales, we talked about the permits just a couple of days ago. You remember when we were talking about building permits? They pulled back on those building permits. It doesn't always show up in existing homes or any of that stuff. Well, something that we're going to talk about here is the home builders with this leading economic indicator, and some of the home builders coming out and talking today is the fact that, yeah, they do have all these permits, but they're trying to slow down on building these homes. They're actually trying to hold back inventory, just like what we talk about with crude oil, supply and demand. There's a huge demand for homes out there right now. Well, if they keep the supply low, that drives prices higher. And that seems to be the game that these gentlemen are playing, or gentlemen and ladies. Existing home sales just slightly missing at 5,860,000. It's supposed to be 5,890,000. So just a slight miss on that one. And natural gas storages, coming in a little bit early, but there we go. 49 billion cubic feet build, expected to be 49 billion cubic feet build. So a build is bearish for something like natural gas. All right, crude oil. Let's get over to the markets. And hey, Wolfman, remember to hit the share button. All right, so we got crude oil inventories, crude oil moving a little bit higher today. Massive move above the 50-day simple moving average. I didn't think we were going to get there, and I didn't think we were going to settle above it. Well, all of those things came around, and we did settle in that 70 handle. So today, making a little bit of a move to the upside. I am not out of the woods that we have seen a dead cat bounce here. All right, I think the dead cat bounce is still in effect here in crude oil and in the equities. Now, obviously, I haven't added anything, or I shouldn't say obviously, I haven't talked about that yet, but I haven't added anything in the energy sector as of right now, I'm waiting for some confirmations here throughout these charts that we're going to be looking at, because I don't want to jump on board. Usually I'm a little bit early, but I'm going to hold off right now because we're right in earnings. I want to see how they start shaking out moving forward. Bitcoin, 650 points on the day. Wow, that's pretty much unchanged for Bitcoin. Gold futures making another move higher today. We were outside of the 1800 handle earlier this morning overnight, and we are starting to recover near the highs of the day. I think VIX is starting to creep here. It's still in negative territory, but I think we're going to actually see the VIX start to move higher here as people are going to probably add a little bit protection here at these tops. I think that this dead cat bounce is starting to look like it's shaping up. Obviously here in the NASDAQ, this is not a topping chart, but if we were to start finishing near the open or yesterday's close, that would make this look like that dead cat bounce that I'm talking about being set up. Here in the Dow Jones Industrial Average, they're off by only about 44 points, but again, making, a bit of a tough read on the charts here with this setup right now. If I were to look at this right now, it would very much look like a continuation pattern to the upside. So today's setups are going to be something very important. Whether or not I'm right on this dead cat bounce, the dead cat bounce is going to be, we start roll over next week, maybe down towards some of these points of control. But at this point, charts are a little vague because, if I were to take a snapshot on this right now, I would say it was a continuation pattern. It is going to really be the end of the day. Even if we finished, somewhere around, let's just call it 43.66, about 15 points higher, that would still make this chart look like there is a topping pattern there, because it would look like a hangman doji at the top of this move. Right now, if you can picture this, if we started rallying, keep in mind the whole wick and everything else is still going to look very similar to that. But if this market started moving higher and finished near those highs, that candle would end up looking more like this, where it turns green because it goes positive, up and around there, and it would create this type of look there. And then I would have to wait for a confirmation. These are the types of setups I'm looking for a bearish confirmation there on the chart. So not getting that right now today, very much waiting for more of a setup. I don't know why I wanted to do that, but anyway, moving over to the E-mini S&P is pretty quiet day, right? I mean, I couldn't say that we are long or short at this point. It's pretty flat. The breadth is pretty even here, and we're right at a point of control. Anything to move this market is going to be, the thing that's going to move this market is likely, at least today, going to just be talk. So the risk today is probably, to the upside, really, but I don't think that we're really going to make any moves today unless something comes out, some of these talking heads start stirring this pot. Why? Because tomorrow we are inundated with all kinds of economic data in the form of purchasing managers index. Now, keep in mind, these purchasing managers are the ones that are forward-looking. I like to look at forward-looking economic data, and this is one of the best ones that is forward-looking. We get all these other data points where we got existing home sales. Well, that's already happened, okay? So some of that is already played into the markets, where these purchasing managers, they really haven't acknowledged the demand until we see these numbers, okay? So whether the demand dips or rallies, keep in mind those PMI numbers, anything above 50 is expansion, anything below 50 is contraction. So overnight we get some economic data in that flash PMIs, and then that will probably be the major determining directional indicators, all right? So those are what we're looking at, and tomorrow we get our own flash PMI. It's becoming more and more of a stronger data point, these flash PMI numbers, than in the past. We usually look for the Institute for Supply Management. Now, folks, that is the number we want to look for our PMI numbers, but we do get some indications with these flash estimates, and they are pretty close as of recently. All right, Netflix, I'm looking at this trade for the put diagonal. We're going to be doing a webinar on this today. I'll show you how to spot when this is a good opportunity and what we need to look for, the levers and pulleys on this type of strategy, long put diagonal is a longer duration directional bearish assumption. Okay, so I have a longer term directional bearish assumption with Netflix. Now I do think it might just kind of peter out here and kind of settle down for a moment at this point of control. That's what the point of control kind of has a tendency to do with these underlyings, because that's where time and volume's been spent, right? If you and I transacted all day long at $10, okay, well, we know when it's at $10, I really don't want to do any more transactions there, right? Because we have done so many transactions at $10. Now it gets up to 15, right? And you are long 10s, you want to sell it. And I want to get out because I'm short, I'm losing money, right? So there's angst at those extreme levels, and it would happen on the downside to you on the angst, and me on the one that to cover if we went down to like 5 from 10, right? But right at 10, you and I probably aren't going to do a whole lot of transacting. And that's exactly what the point of control kind of tells you. We'll settle down there. You get at the extremes and you will get some market movement. That's where you want to take advantage of it. When it's kind of at the point of control, you have a tendency to think that it's going to settle down here. And I have a longer term bearish assumption on this. So that's why I want to look at this put diagonal for this trade, because if it settles down here for at least just a few days and then continues to the downside, that's the perfect way to set up a put diagonal. If you wanted anything to work perfectly with a put diagonal, settle down right here for the next couple of weeks after setting up this strategy. You get to cover those front months for almost nothing and have those puts on for the longer duration. So that's what we're going to try and do. And I'm going to talk you through that trade today after the close. So make sure you go to Pro Trader Strategies or hit the subscribe button and make sure you get a notification so that you know when we're going on. That's the easiest way to do it as far as I'm concerned. So Netflix, I'm going to show you how to play this trade to the downside, and NVIDIA. Everybody was talking up NVIDIA yesterday. I was talking about how this looks like a dead cat bounce. The miners are still struggling in China. Bitcoin, keep in mind, that's where the Bitcoin miners and all these miners for the cryptocurrency, not just Bitcoin, I shouldn't say, but NVIDIA is the video card of choice for these major miners. And if they're crushing existing machines or they're selling these existing mining operations on the open market, those mining operations are selling for about 50% of value. All right, so they're throwing this stuff away. Now, if I can buy a video card at 50% of value, what's the likelihood I'm going out there and buying a brand new one? Probably 0 to none, and none just left town. So we're going to look at NVIDIA. I'm still playing this to the downside. Keep in mind, I played this as a synthetic short in the webinar. So if you ever want to look at getting long or short underlyings, like specifically stocks, especially high-flying stocks that you might not have enough margin in your account or enough money in your account to go out there and buy 100 NVIDIA, or short 100 NVIDIA and then borrow all the borrowing costs, maintenance, and all of that on it, it's a headache. Why not just use options? And I show you how to do that in the synthetic short or the synthetic long webinars. So please check those out if you want to take advantage of a smaller account, but create a more diversified or hedge. That's the way to do it as far as I'm concerned. So NVIDIA, I'm still in this, and I talked about the dead cat bounce. A lot of these things are looking like they are setting up bear after this bounce. So we got 3M is looking like it. Look, confirmation to the downside. We've got this topping pattern here, and that doesn't look so good when you flatten it out necessarily, but here we go. This topping pattern, confirmation below the 50-day simple moving average. 3M looks like a short, although I don't necessarily want to play it because of the earnings there. Work, if you have work on, hey, we've got a topping pattern here, spinning top doji with a 52-week high. That looks like we're ready to roll over. Again, I haven't added any trade on this, but this is something I'm keeping an eye on. The markets in the options for work or slack are really wide. So that's usually why I like to stay away from that. You guys know I like to trade the tighter markets. Then XOP, if crude oil is going to start rolling over, XOP is not going to do well. Well, who's leading? Is the dog wagging the tail or is the tail wagging the dog? Right now, it looks like the tail's wagging the dog with the XOP oil and gas ETF showing weakness ahead of really the crude oil. Crude oil is pushing up into the 70s. We just showed you a chart on that. And here we have XOP rolling over back down. I think that direction risk is to the downside in crude oil and energy related stocks. I think Ahmad was talking to me back and forth in the chat window in one of the other videos and was asking me what's my go-to for the oil and gas. I don't necessarily like to trade the leading economic indicator or the leading future, and crude oil is the leading future, so I stay away from that. Bonds, you almost never see me trading bonds. I usually go to the TLT, all right, or one of those. So I usually like to go to the ETFs. They're a little bit more mellow and they have a tendency to lag a little bit. So you can watch those leading indicators like crude oil make their moves, generally speaking. Now, obviously, I'm talking today. This is pulling back while crude oil is giving a little bit of a push there. But I do like to trade the ETF. It's a little bit more, it's a little less volatile than crude oil. One thing we used to say in crude oil is, hey, if you love to lose money, go trade crude oil. And if you want to make money in there, you have to basically be a masochist about losing money. So I would rather go with XOP on that, get rid of some of that volatility, not necessarily trade that leading market, okay? You know, I was a Fed Fund futures trader. Bonds, 10 years is what everybody's talking about. Well, we are the ones that are supposed to be leading the charge on interest rates in the Fed funds, but we could always see the money go to the bonds, then to the 10-year, and we knew it was coming to us, right, on those interest rates. So it would just start at the bonds, roll around, and you could see it coming and take advantage of it, maybe get in slightly ahead of that move, okay? So that's why I specifically talk. You don't want to get run over by a steamroller picking up pennies, okay? Wait for it to circle back around for you. And that's about it, folks. XOP, looking to the downside. You know, somebody was talking to me about McDonald's. I don't see anything here. Yum brand is really starting to move to the upside, and McDonald's was looking a little bit iffy. I don't think that we're going to see any downside. I mean, Chipotle came out with massive earnings. Today they're getting a little bit of a pullback, but at the end of the day, they were doing very well. I think all of these fast food places are going to do probably better than some of the sit-down restaurant type places as people are starting to get out. And that's about it for that. Kroger's starting to look a little bit more bullish today. So finding a bottom, bounced off of that 200-day simple moving average. Point of control is just slightly higher than that. So if you're looking at Kroger, we talked about this a little while ago, it looks like it's starting to roll back to the upside for Kroger. So if you have something on there or you want to add Kroger, I would look to sell some puts right around this 60 level. I think you'll be able to collect that credit. And if it rolls down there, that is a good strike location to get long something like Kroger. So if you're looking for adding stocks, this is a great strategy, is to go down there and look for like a support level or where it's consolidated. That would be the location a little bit below where I would be looking to sell some puts to add something to my portfolio. I would not necessarily look to do that right now because we have this earnings coming up. I don't want to get in ahead of those earnings on something like that. But selling puts with high volatility and a good strike location, that's what we're trying to do here. Turn those probabilities in our favor to make sure you guys are clear of concept there. All right, that's about it. I think if you guys don't have anything that you guys want me to run over, I'll throw it out to you guys. Throw it over there in the questions box or in the comments section, and we'll flip through some charts if you guys want to and see if we can find a trade for you. Anybody out there? I see some lurkers out there. Don't be shy. All right, so keep your eyes out for this Netflix trade. I'm going to be playing this to the downside with the put diagonal. So we're going to talk about how you set this strategy up. When is the environment completely off for a trade like this? There is something that I'm going to show you where you can spot it immediately, like this would not work for a put diagonal or a call calendar, but we can take advantage of this put calendar with Netflix, and I'm going to show you how you can spot that quickly and easily for a long-term bearish move. That's about all I got for you folks. Make sure you click on the subscribe and get the notifications, because I'm going to pop in here every once in a while and just talk about trades. If I see something happening, I'm going to just go on live, and that way you'll get a notification. Flip over there and we'll talk about that trade as we go along. And that's about it, other than, you know what? If you can't smash that, take that. Bye for now and take it easy.